okay. We got through NVIDIA earnings. They're pretty darn good, but what's going on with all these other stocks? Like even within tech, they're taking money out of some tech and putting it in the hardware. We'll cover that. We got a lot of red, more red than you think on the screen. So we'll figure out that rotation. Two big guests today. Christian Fromhertz is going to be coming back on pre-market prep at 8:15. We have Nancy Tengler, Laffer Investments. Go with her themes at 8:35. We got a lot of earnings to cover. We're going to get it started right now. Pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's start out with our charts here from TradeStation. Board to trade chart, analyze, customize, all in one platform. Trade smarter, move faster, and stay in control with the platform built for serious investors. Hey, folks, we're up 32 handles. You can thank NVIDIA for that. Perhaps breaking out of that consolidation period, 77.22. The buck up a few pennies, not doing much, kind of on a little bit of a winning streak. TLT bouncing off 83 again, down a nickel, 83 and a quarter. USO up 85 cents, 128.20. Kind of stabilizing. GLD and SLV up marginally this morning. Bitcoin taking another shot at the 80K level, up $1,190 at 79,700 on and 710. Let's bring on Triple D, and I mean, if you wake up this morning and you're going rah 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 rah, NVIDIA earnings, and then you take a look at your portfolio, and you're like, there's something I'm not buying everything today.
Bring up let's look under the hood. Bring it up for starters here and look under the hood, because you're coming in saying, what a great day for stocks. But what we know is when tech has such a great day, everything else does not. The breadth is terrible today. You have rotation station right here, right now as we speak. They are hammering everything except tech. Look at the RSP. The RSP is trading in the red. That's the same 500 stocks on the S&P 500 SPY, except you equally weight them, and they are in the red. So NVIDIA's gain, CrowdStrike's gain, is the other stocks market's pain. And that's what we are seeing here this morning. Bring Brentster in here because we were talking about this in the think tank last night. And I was short in staples because I'm like, this is not going to be the day for staples. Like right away, Coke's trading higher off NVIDIA. I'm like, it doesn't make any sense. Sometimes you just got to take the low-hanging fruit, and short stocks that are trading higher that are probably going to be a victim of the rotation. So, charts are pretty and everything, but rotation pays the bills.
Good morning, everyone. How's everyone doing out there in the chat?
They look like they're pretty pumped. So
I'm pumped for today's show.
Christian's coming on 8:15.
Yeah.
We'll bring him back to the stage, see what he's been trading over there as well. But, I mean, today is a good day for a lot of stocks. So let's take this off the screen. Let's go to the good stuff here, because if you're in tech, you're smiling here this morning. So many people in the Twitter sphere and Reddit, Discord, social media, they are tech. They don't give a crap about any staples that are trading down. And let's go to the big gun of them all, the NVIDIA. The grenade trade did work. It was trading up ahead of the report. On the report, it leaked, though, then Brentster, but eventually commentary from the call drove the stock higher. NVIDIA, give us details here from the report, Mr. Slava.
That's right. Quarter was strong. Sales for the quarter were especially strong. Company reports 222 in earnings. Analysts were down at 210. That's a decent beat. Sales coming in around 96 billion. Analysts were down around 92 billion. They did give quarterly guidance with their press release. They see next quarter sales about 106 million to over 110 million. Analysts down over 100. Analysts are down under 104 billion for the estimate. When the call started, within the first 3 or 4 minutes of the call started at 5 p.m. Company CFO saying we are looking for 2028 sales growth of 70%. For a little perspective, the Q2 2027, which is quarter they just reported, to the Q from the Q2 2026, their sales growth rate was around 106%. So their sales growth is going to stay in the high double-digit range for at least, it seems, the next year or so.
Yeah, and then when the call started, they came out and they said 70% growth they were expecting up to
Yeah.
2028 here. And that's when the stock really exploded higher here because they're giving you a little bit farther out guidance than just next year into end of the year after. So they're seeing no slowdown at all here, at least for the next couple of years. And that's why the stock blasted off during the call. Like literally 1 minute into the call, it blasted off. And, and we've come off the highs a little bit. I mean, we hit 226 after hours, so maybe these overnight traders get a little antsy in their pantsy. So we have come off the highs, but let's throw the technicals to Mr. Elconin. He's ready to give us some levels.
Yeah, we'll make it real quick because we got a lot of stocks to cover. It didn't quite get back up to that triple top area, so you needed to be out there in the 226 handle. The pre-market high comes in at like 226 and a quarter, so just right up here. Everyone got their money back. Over the expected move. The expected move just seemed low to me. It was just I believe it was just around $11. So it did get a little head over heels, but it's coming in a little bit. I like to see it get back up into this area and clear this triple top. So we've leaked $4 off the high, so that's an important zone we got to chew through. Long ways to go to get to the top of yesterday's range here, but they have to use your shorter term charts here to figure, if you're looking to buy this pullback here. But it was well bid. You could tell when they were hitting it yesterday that it was, right off the headline number, it was well bid, and then the call took it up. So astonishing numbers, great move. Couldn't quite get to that major resistance.
I stay long in my long-term portfolio. I've been long for a few years here now. But from a trading perspective here, this has not been the month to chase stocks. Think about the poor meta traders yesterday that were like, oh, yeah, this is great news. That didn't hold up for more than 10 minutes once the market opened at 9:30. So I don't think Nvidia is going to give it all back here, but I would not be chasing anything up 6-7% in this month. This has not been the market to chase in. And not saying we're not going to move to that market, and one of these times we're going to have some follow through, but just guilty until proven innocent on chasing of moves. I never like buying rips, but I tell you right now, shorting rips has been the way. So we'll look here. Nvidia shorting rips. I don't know if I'm gonna have the guts to short it here today, but we'll keep an eye. Joel's giving you a good level at 226, 227 area. We'll see where it opens.
Yeah, I mean it's getting thick here, and there were you could just tell this 15-minute chart that like 226. Oh, they came down to 225. Maybe that level's going to be 224 now. But keep an eye. Good move, but it is moving some other stocks as well.
Yeah, well, it is. It's moving a lot of staples down, but all tech is trading higher here. But let's go to the other earnings stocks. We'll try to get a few in before Christian comes on. CrowdStrike CRWD reported right after the bell too. I want to start with Oklo though, because this was really Okta, OKTA popped huge right before the close. So about 7 minutes before the close, this stock pops $10, and everybody's looking, "What's the news? What's the
It's
news?
a leak.
What's the news?"
It's a leak.
And
It's
then
up
somebody's saying about an earnings leak. Well, they got the leak. They got it right if they did get the earnings leak, because then we popped another 20 on the earnings report here, Brentster. So
Yes.
not sure if it was leaked or if somebody was just anticipating they were going to beat, but somebody bought some major Okta right before the report. I guess when you see a stock pop violently 5 minutes before it's due to release, there's a pretty good chance it might beat. And that's what we saw with Okta.
The press release officially hit the press release wire at 4:01 p.m. So whether it was out there, we don't know, but it did
never
hit.
found it out there.
We never understood, but it did hit right after the close. The report was fine. They reported Q2 earnings 105. Analysts were at 97 cents. Sales were around 805 million. Analysts were around 795 million. The Q3 guidance was kind of in line to even weak. However, they did raise their 2027 guidance. They raised it from around 385 to around just under 395. Analysts around 384. Sales expected around 3.2 billion. Analysts right around 3.2 billion. So despite what looks to be an inline quarter, all right guidance, software stocks wanted to catch a little bid last night.
It's running into resistance right where you don't want it to run into resistance here. So we just got done saying this has not been the month to chase. It's up 18% today, and it's stalling out right at those old highs, Joel.
Yeah, it's above it for right now. It's above it for right now. So, just illustrated on the monthly here, double 157. So I'm just gonna say, for right now, it's hard for me to say. 157 support, minor support. After you've had this kind of run, but if they did, the pre-market high was way over 160. They had all that juice in it. A lot of people getting their money back. They were holding through the report. Oh, we hit 150. No, we hit 129. So a lot. Do people want their money back? Just getting it back in one full swoop. We shall see.
I think the answer is yes. I say it's yes.
You know which way I'm leaning on that.
This is the setups. Like, we're seeing a lot of stocks, tech stocks, pop here this morning, but popping right into resistance here. CrowdStrike's going to be the same story here. Nice 10% pop. Retail traders having a frenzy here after hours, but we know what changes at 9:30. We'll just stop for a second. It's the type of investor. You have retail trading after hours, overnight, pre-market. The institutional investor trades after 9:30. And that's why these violent changes sometimes happen, because what is the institutional investor? They're huge. You get a few big guns saying, yeah, man, I'm going to lighten up here, and it really moves price. And that's what we saw with Meta yesterday here.
So
CrowdStrike, like the Meta was just just boom, 10 minutes, all the gains were gone. 8 hours of trading after hours didn't matter. In literally 10 minutes, the institutional trader just eats all that up. So with CrowdStrike here, give us the results here quickly, Brentster. CRWD.
31 cents versus 29 cents. Sales coming in 1.47 billion. Analysts were at 1.44 billion. The guidance kind of, again, the story here, as we were looking at these last night, I didn't think these reports were like especially in line or maybe a bit conservative guidance. But now that I'm looking at these this morning, I'm like, these reports really weren't that blockbuster from these software names. They did raise their 2027 guidance, but it was kind of raised to where analysts' expectations already were for CRWD.
Joel, levels here, same
I mean,
story,
it's the same thing. I mean, you want to, after this run, I mean, you've got to 213.70. Let's get a meaningful retracement in here. Same thing. Do you want your money back or not? I mean, this is just here. You were just at 220 and change, 227.50. And then right here, the 50%, 204, 205. I mean, we saw this with SanDisk. We saw this with you see when stocks have this kind of tumble. So I just have to look at this. 205's holding up right now. It's 15-minute support. You're well over the 50% retracement of this recent move. Your next daily high, 213.98. $6 away from that.
Okay, we're going to squeeze CRM in here as well. Salesforce trading up 10%. It was a fabulous report. Quickly, Brent's to the report, and I'll give you a little Benioff commentary as well.
That's what I'm waiting for. And this was a fabulous report. They report close to $6 in earnings. There was an adjustment in there, but analysts were around 330. Sales coming in 11.35 billion. Analysts were at 11.32 billion. They look for next quarter earnings 342 to 344. Analysts down closer to 335. And like some of these other software companies, they did raise their 2027 sales guidance. Their earnings around just under $17. Analysts all the way down at $14 for CRM shares this morning, trading up about 10 or 11%.
Benioff was all smiles on Mad Money last night. Like, he could not stop smiling because he's been so angry that his stock's been going up, and he was totally doing the whole, parade, told you so type deal. SaaSpocalypse, they asked about that. He said, I'll tell you why that is utter nonsense. He was just not holding back. He was marching around and parading and all excited here. So, if this stock doesn't hold up, he's going to be throwing chairs later on today. But, hopefully for the chair's sake, it does hold up. We'll go CRM, Joel. Technicals quickly here.
Technicals on this? You hit 236 and change.
We're off the highs.
Yeah. So, I mean, this right here, this horizontal line is where it got to. I mean, if you have a profit target in this area, I mean, I would seriously take a look at it. You've come down $10 off. Found a little buyer here at 225.58, 225.60. That's your 15-minute support. But if someone comes in with a couple hundred K or couple million to sell, I mean, we'll see what the institutional money does. I just
It's the
kind of
same
feel
thing. That is the
same
question
thing.
you should always be asking yourself when you're buying stocks up 10, 12, 15, 18% after hours. What is the institutional trader likely to do? And I mean, we've been in a market where it's been rewarded to fade moves. So we've been in a market where it hasn't paid to sell the rip. And the institutional money is there. And you know what? Maybe SaaS apocalypse is a joke. Maybe it's nonsense, like Benioff said. Or maybe it's just not coming as fast as we thought it was going to come. So it could be a timing issue here too. I'm still not betting on software. I'm not coming in here and saying, yes, today is the day we go buy IGV because it's up 2.3% and software is back. Software has been back. Software has been moving here. But I don't know if I want to be fully invested in software still. I still think AI is going to do some disruption. And obviously last night was great for Salesforce. Got the Anthropic guy up there as well with Benioff, and they're all smiles, and the Anthropic saying, we don't want to disrupt anybody. Nonsense. They're disrupting everyone. Of course they want to disrupt people. So there you go. So continuing, with this thought process here is I still think software is still guilty until proven innocent.
Okay. All right. We
continuing the earnings parade because there was a lot of earnings here, obviously. And going last night, let's just quickly finish off last night and go with Hewlett Packard, HPQ, because this thing's down 13%. There's all good stories here except for this one. And this one popped on the initial report. The earnings didn't look that bad.
Whew.
Brentster?
Where is the Brentster? Oh, I'm sorry.
We just lost him. Hang on. Put him back on here. HPQ.
Hey, sorry. I was guiding Christian into this StreamYard. He will be here in just a sec. He was going.
He was on the wrong link.
He was in the other one. HPQ. Here I am though. HPQ reporting 83 cents in earnings. Analysts were at 69 cents. Sales coming in at 15.7 billion. Analysts were around 15.3 billion. Like, this looks like a solid report. This looks like solid guidance. They're looking for next quarter earnings 69 to 79 cents. Analysts are down at 67 cents, but shares lower here this morning.
Yeah, it's just one that's just not loved. I mean, HPQ has been in the gutter for years here, and it takes a lot to turn sentiment around in a stock. We've seen that, once you're hated, it seems like you're hated. Unless you get the Trumpster on board, it's tough to turn the story around. So I think the earnings are fine here. It's just a matter of nobody gives a crap about HPQ. That's the biggest problem, hurdle that they have here. Now, that doesn't mean that it's had a pretty good run here too. So, but a significant dip here. Joel, is there a level we want to be buying?
26.
Is this a dip? 26? One level.
Yep.
I like one level.
Yep.
$26. Well, we're not far from there. So Joel's giving you a good level here. So maybe we are buying the dip on HPQ. I haven't decided myself.
Let's go get Christian. Here we go.
All right, a familiar voice coming to the stage, Christian Fromhertz, Tribeca Trade Group. Head on a swivel today, Christian. How you doing?
Very good. How are you guys doing?
We're doing good. I mean, our leader, will lead us to the promised land or not. What about NVIDIA earnings and impact on the rest of the markets? What we want to know.
Well, this was a nice switcheroo last night, right? I mean, it looked like it was doing what it's done for the last 4 quarters. NVIDIA started to sell off a little bit. I think everybody kind of got the feel that the last year or so, NVIDIA hasn't really moved too much on earnings. The implied move was about 6%. There was a lot of notes out yesterday saying, oh, geez, it hasn't even moved 6%. And you got a nice pop on the earnings call. So a nice, pleasant surprise. I think today's going to be very interesting because it's kind of been, especially in the tech sector, it's been either software or chips. Today you got both up this morning. So what do you guys think? Which one's going to win, or do we actually see both rally today?
I don't know. Cats and dogs living happily together here is always interesting here. I think you'll see something fall apart. Right now, it's been the staples and some of the other stocks. RSP has went to the red. So, they seem to be just buying tech across the board and selling all other stocks here. So maybe that's what happens when you have hardware and software both going up, which we don't see very often here, Christian. They just sell everything else then to make up for it. So what do you think about the rotation, though? Obviously, you follow the charts very well here, but the rotation has been pretty violent too. Like this whole hardware versus software thing where they can't go up on the same day here. Do we ever break that? Like, can we get to a point where just everything goes up? Because it never seems like we have an everything rally. Like when Nvidia is really good, last night, and the software is really good, you think, okay, here's going to be a big day for the markets. And then what do? They just start selling off non-tech stocks, and the S&Ps are leaking here. What's it going to take to get like an everything rally or an everything sell-off even?
Yeah, I think this is bound to change. I don't know when, but it's very, I don't want to say odd is probably not the right word, but it's pretty rare to see this where it just goes back and forth. I think that you're going to get some separation. Like I don't think it's going to be all software. I think there's going to be some standout names, maybe some areas. The cyber stocks have been very good. I like that group, but it hasn't been exactly easy to trade. It seems like the cyber stocks, when they come down a little bit too far, and then they want to revert back up. RBRK also reports this week too, so that'll be an interesting report for the group. But I just don't think I think a lot of the software names have been reverting to the mean versus leading, and I think some of those are going to stall. I would be watching Salesforce is going to be interesting today because that has not been one of the strongest performers. I do see a lot of resistance at 232, but that's one I would keep my eye on. But and then to go look at what the semis are doing, I think that there's going to be some names that maybe break away from the whole group. When that happens, I don't know, but I don't think it's going to sustain where it's either you wake up and all the semi names are up decently, and then you go the next day and it's the software names. I think we're eventually going to get out of that. But yeah, it's an interesting dynamic, not just with tech, but with also some of the rotation that you're seeing amongst the other groups.
Yeah, we'll talk healthcare. You look at the XLV or even the XBI, this has quietly been one of the best performers of the year. They don't get the press headlines, they don't get the CNBC coverage here. But XLV is right here, all-time highs. XBI making new all-time, or making close, I guess not new all-time highs because we were up there back during the COVID times, but we're back, to 5-year highs here there as well. Healthcare has been really hot, and especially since the whole Moderna Merck thing kind of ignited it more as well. Are you watching healthcare, and what are your thoughts on this sector?
Yeah, I'm overweight healthcare, both healthcare and biotech. A little bit more aggressive on that side. I'm long XBI. Another ETF, because there's not a lot of ETFs in this space, but you could look at ARC-G, which is genomics.
Oh, yeah.
The two areas that I really like and have been showing really great breadth in terms of the groups are the genomics as well as the therapeutic names. They're really, for those ETF providers out there, if someone wants to create a both genomics and therapeutics ETF, that would be great. In the top, because XBI is an equally weighted ETF, but if you look at the 25 top holdings, and they're just top holdings because the price has accelerated since the last rebalance in June. But you've got about 12 names that have therapeutics, 12 companies that have therapeutics in the name. So that's really hot right now, and I like that not everybody is. When you bring up social media, it seems to be that the retail crowd either gravitates towards the AI trade or to software. There's not that many people talking about these great moves that we're seeing in the therapeutics and the genomics. So I like this group a lot.
Is there any specific stocks you're watching, like leaders of the group here? Obviously everybody's been watching Moderna here because it's went nuts. But just talking back to, even the therapeutic stocks, are there any specific names you're looking at breaking out, or are you just trading from the ETFs?
Well, this is a tricky group. I'm not a specialist in biotech.
Yeah.
I like to, because there's always the drug studies that could trip you up. And I like having what's known as a core satellite approach, putting 50% in the It's from your CFA terms. I don't know if you remember that one.
I like
Dennis.
this.
But your core position would be the ETF, and then so if you kind of say take a 50 or 60% cut with a couple of the ETFs, and then have like 3 or 4 different individual names, smaller, so this way if there is a drug study, you don't get completely like hit hard with that. But I like RVMD. They had a good study out yesterday. And this was the name that Merck, I believe it was Merck, was interested in buying, and they said no, it's too. We're not selling for that price. Which to me is always something that's interesting when somebody says, "Hey, you're too low, and we don't want to sell to you." And the stock has been, since that news came out, the stock has just been continued to move higher. Very shallow dips in this one. Twist is another one that's been very strong on the back of, I think they were also kind of, this is TWST.
Yep.
Another one that's just been so strong recently. Halo had a strong earnings report. This is another one that just hasn't come in. So when you see a lot of these names that are just like up and to the right, they're not pulling back much. And again, I don't see everybody, gravitating or talking about these names. TGTX is another one. But you literally have about 15 or 20 of these names that are showing just this real nice strength. So I like the group a lot, and I'm overweight.
Do you, when you're buying these things, and I'm always, like, I'm scared always to chase stocks. I'm not a chaser here, but I mean, in this case here, these stocks have just continued to go higher. Are you looking like, following a moving average? Like, how do you like find a buying opportunity for something like this? Like even on a Halo, that's, went up, 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 up. How do you buy it? Like, where is your spot?
Well, it's small. It's going to be small dips. I mean, nobody wants to chase these stocks, especially like this high. But if you look at the day, the candle that it had on August 7th, which was basically straight up, and then you had about four days where it just consolidated. Again, it's these things, they're not going to, if the strong names are not going to come all the way in, but that little dip that you had on Friday, August 14th, and then you see the move up and retaking like a 5-day moving average. That's kind of what you're going to do in some of these strong trends is you're going to wait for little dips. I like dips back into the 20-day moving average, but some of these you're not going to see it. But that's where I would be really actionable, is where I see something like that, a dip into the 20-day moving average. But again, like I did this with XBI as well. We had a little bit of just consolidation, a week. I was just waiting for a weekday, and it kind of checked back into one of those moving averages. And then I went ahead and said, okay, I'm going to get involved in my trading account. I was already long in my one account, but I just kind of added it in my trading account on a dip.
All right, there's other sectors that are moving that are catching your interest, and we have a little. I don't know if you heard. There's a little conflict going on overseas and affecting the oil market, and but you're looking at the refiners. I talked about some of the refiners that are catching your attention.
Yeah, you could take your pick. I mean, the refiners have been the strongest area in energy, and the one that I really like. But there's 4 or 5 of these things that they're going to look so close. Valero is my favorite in the space, but
I had up.
Yeah, so that one, like, just again, you're not going to get right now these big dips. This consolidated quite nicely for the second half of June, and then August it turned higher. It consolidated or went sideways for about a week and a half, and then had a nice candle yesterday. PBF is one that probably not that many people look at, but it actually had the biggest earnings reaction. This one has dipped a little bit, so that's PBF, and that will give you an opportunity. But PSX looks like very close to identical as Valero, and then MPC is another one too. But again, they're just so. It tells me that something's going on here if they're all this strong. And they're none of them are really dipping when even they're out of favor for a couple days. It just tells me that there's a lot of strength in this group. So there's pockets of strength right now, that leadership in this market. It's not, going back to the rotation. A lot of things, to your point, I know, Dennis, you like to sell rips and buy dips a lot of times. I mean, I see that a lot in the AI trade right now. That's what you're getting there. That's what you're getting in some of the other areas of the market. But you do have some things that are trending nicely like this.
Yeah, it's awesome that you can come and find those things too. I mean, where do you look? Do you have scanners looking? Or are you just going through charts like crazy? Like because you always find the strongest of the strong. So I was always amazed by the stocks you're in. You're always able to find, even in sideways markets or down markets, you still find the strength here. What do you use to find that strength?
Well, I compile a list of all the names that have had strong, really strong earnings reactions. I call it the gap up or earnings list. So I've got one major list that I'm constantly, scanning through on a daily basis. But then it's just as simple as like looking at the 4-week new high list for the S&P and Nasdaq. I also look at the 52-week. There's not that many names on the highs or lows, but the 4-week will kind of give you a sense of what's starting to kind of break higher. And then when I take that 4-week list, that's something that I put out daily on my Substack. Then what I'll do is I'll sort that by groups and sectors, and something like the refiners, just for example, because it's easy to talk about. But if you see 3 or 4 of those constantly on that 4-week new high list, that something's going on, and you kind of take those results from the scan, and then you just kind of go through the charts and figure out which one is the strongest, which one is the leader, which one looks the best.
Okay, Christian from Hertz, Chairman Tribeca Trade Group, joining us here on Pre-Market Prep. Great to see you, Christian. We'll be dialing you up again real soon.
Thanks, guys. Have a great day.
Thanks, Christian.
Little econ data, not really. Not they said go wide triple D. I don't think you had.
I don't think anything moved. Brentster, did we get some data right there? What happened?
Yeah, we did get some initial jobless.
Yep.
We did get some initial jobless claims. And what did you see also? Wholesale
inventories.
Our initial jobless claims coming in a little better than expected, 203,000 jobless claims. Analysts were looking for around 208,000 jobless claims. The continuing claims is nice to highlight here. That was a little higher than expected, also about 1.78 million. Our wholesale inventories for the month of July were up 1.3%. Economists were looking for about a 0.2% increase. So that is a solid reading. Market is moving lower here. We did just get a headline a few minutes ago, about 3 or 4 minutes ago. White House press secretary saying there are currently no talks happening with Iran right now. She was just on Fox News. Triple D
round
knew
and
that
around
it was
we
coming.
go, round and round, up and down the roller coaster of the strait. We're all riding it. We're never going to get off this roller coaster. It's a deal, no deal, deal, no deal, deal, no deal. We'll be talking about this a year from now. So, I mean, eventually the market becomes numb to it, which it kind of is. I mean, we've numbed up quite a bit here. We used to live on every oil headline there, and I'm like, I see oil up a little bit. I was like, oh, did something happen? It's like second, like you don't have to worry about it as much as you did before. So, do we think there's a deal? There'll be a deal, then there'll be no deal, and I don't know if we're ever going to get a real deal. So that's where we are. Ride the roller coaster of the Strait of Hormuz.
Okay. We're just hanging out here. We still have substantial gains in the market, 30 handles. Kind of broke out of the consolidation that we had, several highs in the same area. What right now we're maintaining, and that's acting as support. But you see the breakdown, the few days of consolidation. And then the breakout. For me, like my main focus right now, since we are 20 handles off the pre-market high, let's see sustained bid here. We're halfway back on the session at 77.23, and that's been acting as a little bit of resistance, but pretty quiet here off the weekly continuing claims number.
Shall we go get our next guest, Nancy Tengler?
Yeah, let's do it.
All right, here we go.
All right, Nancy Tengler, CIO, Laffer Tengler Investments. Nancy, how you doing this morning?
I'm well, Joel. It's a little early here on the West Coast.
Oh, okay.
Laughing myself silly.
Yeah, that's okay. Well, you're waking up to a decent market this morning.
Yeah.
We'll start with the big gun. We'll get it out of the way. NVIDIA with their earnings report still got that insatiable demand here for chips. Does the runway close here for NVIDIA, or does it just keep on rolling?
I think it rolls for a little while. We stepped out of character and actually bought some before earnings yesterday, added to Micron and Amazon, coincidentally. And I think what you have to know as an investor, and what you have to do, is ignore the hand wringing headlines. Data centers are dead. Nvidia is never going to grow at the pace that's expected. Debt fueling this growth and the circular financing, and you have to look company by company. And that company, for example, Nvidia, is trading at a value stock multiple. And so we actually added it to our value portfolio as summer began, and we've continued to add to it. Yesterday being the top off on our position, and I believe that the growth is sustainable. When the CFO ratcheted up revenue growth from 40% to 70% next year, the stock started to take off in the after hours, and I think the skeptics probably are going to be proven wrong, at least for the next couple of years. And so we like the holding. We like their plan to return cash to shareholders. We saw a little bit about with that with the dividend increase last quarter. So and it was a massive dividend increase. So I think you want to be long this stock as long as you believe that AI is in the early innings, and we do.
Nancy, also Amazon is one that you've been watching here too, and Nvidia and Amazon had a little press release too there during the call as well. Amazon popping up on those Nvidia on the Nvidia call. It's given a little bit back here now, but what are your thoughts here? Let's just go into Amazon here. It's had a little pullback since its earnings, obviously from 230 to 290 back to 260. Is this another buying opportunity?
I believe so, Dennis. I mean, we added it again to our value portfolio. We've owned both those stocks in our growth portfolios and in our 12 best ideas portfolios. But we added Amazon to the growth to the value portfolio right before earnings again, and it popped pretty dramatically. And the reason for that was, if you look at it, just compare it to the other retailers, the other two big box retailers, Costco and Walmart, trading at an average multiple of about 20 times if you look over the next 3 years' earnings. You've got AWS growing at 37%. You got the AI business and the chip business growing at 100%. So this is a company that is run by kind of the savviest of savvy CEOs, the mind behind AWS himself, Andy Jassy, and they've done a lot to right size the business. This latest announcement is another example of him pivoting ahead of his competitors. And then you've got Tetromino, I think I'm saying that right, at 5:30 in the morning, which is the real automation of their back office factory business, or the data. The supply chain business. So I think there's a lot going on that's positive, and it's not trading at a demanding multiple. So we continue to add to that name.
It's
Very nice
kind of
move.
interesting that we've come full circle here with looking at Amazon trading 40, 50, 60 times earnings, and Walmart used to trade like 20, 30 times earnings. Now Walmart's expanded to this like P of like 38, 39, 40 times earnings, and Amazon's grown so much it's come down to the low 20s here. I mean, just even saying, that you've taken Nvidia and Amazon into your value portfolio sounds crazy, but it's true. The multiples have just come down so far on some of these names because the earnings have grown so much that they've went from growth to value stocks here. I mean, you don't have to talk Walmart if you don't want to, but I mean, it's just interesting the dynamics, how this is flipped completely from where Walmart was the value stock at one time to where I don't know if the value is nearly as much as it is with Amazon now.
Yeah, well, happy to talk about Walmart. We own it. Yeah. It has been our poster child of an old economy company that has pivoted to the new technologies. Now, that's not just AI; it's robotics. Digitization was the first technology that they embraced, and they of course use AI and leverage the cloud. But this company has. I guess we've seen the fruits of that in the stock price performance, and it's been flat since the fall. It's underperformed target, but the fundamentals are much better in my view. I mean, you have kind of a C+ player in Target, so the expectations were pretty low. They've exceeded those expectations. I think the culture's broken there, even with the new CEO. You saw it with the latest Halloween costume debacle. But Walmart's run by adults, and these are guys that understand technology. Doug McMillon was a brilliant CEO. we'll see what the next 10-year brings. But if you look at what they're leveraging with their business, and just look no further than Sparky, which is, the AI agent that is helping people like me who forget why they went on to and what I was planning to order. It brings up ideas for you, and it's increasing purchases pretty dramatically. So yeah, it's got a demanding multiple. I think you let it settle for a bit, turn your attention elsewhere if you don't own it, but you don't sell it if you do own it.
Okay. We're on the line with Nancy Tengler, CIO, Laffer Tengler Investments. Other ways to play the AI trade is the infrastructure build out. And you're looking at the electrification of this with Dennis Cheatin Eaton, the stock that we used to call it in the old Bright office. Talk to us about Eaton Corp.
Well, it's a company that has delivered a triple play, which on earnings parlance is a beat on earnings, beat on revenues, and raising of guidance. It's got a demanding backlog. The earnings growth is robust, and that the backlog is what's so interesting to us because it's not a guarantee of future revenue and earnings growth, but it's an indication of the demand in the build out of the grid and the data center business. I don't think data centers are dead. If you can't build one in California, come across the border to Nevada. We'll welcome you with open arms. I just think it's an opportunity in here where these stocks have all pulled off. We own Quanta, which is PWR. We own GE Vernova. We own Eaton. Even Emerson is an automation play. And Williams is a name that we've cited. Natural gas allows the hyperscalers to move around the grid or go behind the grid. And that's a company that's growing 9-10%. So a more conservative way to play the infrastructure build out. But it's also able to, it doesn't have sensitivity to nat gas prices because it's contracting these zero fee contracts are allowing them to go directly to the underlying customer. And so whether the power is used or not, they're getting paid. So I like all of those names. And I think you want to pivot slightly from the hyperscalers to the infrastructure build out, because that is going to be the first line of offense actually in the build out. So I don't think there's too many names you can ignore in that space.
Let's shift to the bond market here. We've seen a little bit of life lately with the TLT popping up, obviously, coming in here, QE, maybe a small version of QE kind of talking here. Warsh has got some difficult decisions coming up with interest rates. Obviously, inflation has been a bit of a concern here. I think some of the Fed officials would like to raise rates here. Warsh probably has Trump breathing down his neck and doesn't want to raise rates if he doesn't absolutely have to. I mean, what's your outlook for the bond market, and where do you think rates are going?
I mean, I think it depends on the time frame, Dennis. I think they're likely to come down over the next year or two. And the reason I say that is, I was managing money in the 1990s. I think Warsh is channeling his inner Fed Chairman Greenspan. And what he's trying to do is return to the years when we weren't spoon-fed every piece of guidance. We were left with a chairman that didn't speak much. And when he spoke, none of us knew what the hell he was talking about anyway. And so you had to do the work. And I don't think there's a need to raise rates if you look at where we are from a growth standpoint and the ultimately disinflationary impact of AI-driven growth, which is going to drive productivity. That said, the economy is pretty strong. So I can easily see the Fed hike rates 25 basis points. It's not going to matter. We saw 3 cuts in the end towards the end of the Powell regime, and rates rose accordingly. So the bond market's going to do what it's going to do. I'm surprised rate yields haven't risen more. We're still in a pretty tight range. And if you go back and look at the 90s, we had a 10-year that was 5, 6, 7 at 1.8%. And yet that was able to coexist with robust stock price performance. So I'm not concerned about the short-term gyrations. I don't think the chairman's lost credibility. I think he's just trying to change the regime because we're in an economy that is transitioning. And so I don't have huge concerns about rates rising too much.
Okay. All right. A great look at some sectors, the overall market, the bond market. That's Nancy Tengler, CIO, Laffer Tengler Investments, joining us here on Pre-Market Prep. Thanks, Nancy. Thanks for getting up nice and early. And
Thank you.
we'll
Thanks,
dial you
guys.
up again real soon.
Okay.
Appreciate it, Nancy.
Leaking, Dennis. We're leaking.
Yeah, we are leaking here, and it's a day where tech grabbed the baton and is still trying to run with. The Qs are strong here, but everything else is weak, and that's why, we named the title The Next Stop Rotation Station, and this was the stop that wasn't being played much last night. You had a lot of stocks up, and I'm like, this is not going to last. I'm like, if NVIDIA, and if they're going to have hardware and software trading higher, they're going to sell something else off because this is just what this market does. It doesn't like to rally everything. And as we continue to leak here on the S&P, and oil's kind of climbing up a little bit too, which is putting extra weight on it here, we can see across the board, the breadth is terrible today. RSP has now moved down. It's trading down 50 cents here right now, which is down, 0.2%. But I mean, you look at Berkshire Hathaway, the banks are all down. The staples are all down. The drugs are all down. The utilities are all down. The retail sector is down. Some Mouse is down. Home builders are down. I mean, everything non-tech is down. This is very clear. Tech up. If you're not tech, they don't want you today. I'm struggling to find a stock that's non-tech that is actually trading higher here. I do see Lululemon trying to cling to some gains there. Nike trying to cling to a small gain there. But, Caterpillar is tech, so don't tell me about Caterpillar.
Yep, okay, I'm not telling you about Caterpillar.
This is completely, very much a tech rally, and that is it. We don't see that very often where they're not rallying anything else. It's just tech.
Disappointing, yeah. That's the way we started the show. Just what you're looking at here, you got your financials all in the red, 0.5 to over 1% for MasterCard and Visa that just broke out. You see the green here. That's your Micron, your AMAT, Qualcomm, NVIDIA, right there, the leader of the pack. AMD joining in, Intel joining in. Oil down. I'm a little surprised to see the
oil's
trading
up, but oil stocks are down.
Yeah,
so that's how tough it is.
That's
right
how
now.
vicious this rotation is.
I know. XLE is trading down 25 cents with USO trading higher.
Hey, Spoos, get back up there. NVIDIA led us to the promised land.
Who would have thought that NVIDIA would start a broad market sell-off? But that is kind of what has occurred here. You can always count on the chat, though. They'll find the non-tech stock that is up. They had to be earnings because it can't go up just on its own. So DG, Dollar General, is trading higher here. Thank you, chat, for finding us a stock that's trading higher, although this one is off earnings. So it does have some news here. DG earnings pretty good. Dollar Tree not so good. We got one going one direction, one going the other. And you know how this market works. One goes up 7%. Let's knock the other one down 7% perfectly. Everything's just algorithmically driven. DG earnings. And we might as well cover Dollar Tree as well.
DG report looks solid. They report 248. Analysts were all the way down by about $2. Sales 11.3 billion. Analysts were down under 11.2 billion. They raised their sales guidance by not a ton, by about $100 million. They're looking for around 44.5 billion. Analysts are around 44.4 billion. So a better quarter. A little bit of more inline guidance from DLTR. While I'm here, Dollar Tree reporting earnings of $1.39. That also looks pretty strong here versus a $1.14 estimate. They are looking, however, for next quarter, sales around $5 billion. Analysts are around 5.05 billion. So maybe some conservative guidance for DLTR. Joel is going to start with the chart for ticker DG.
140 in change. Where's this stock went to?
Let's see.
Right here.
Man, these overnight traders.
140.19.
It's like 130, 132, 134, 136, 130. I can't take anymore. Just buy it at 140. And then the rug pull.
And then they looked on their daily chart and they're like, oh no, it had a gap down earnings day and the high that day was 140.
These levels work. The Elconin levels 101 class. You got to take this one over on STN Think Tank because I tell you, he keeps it simple, but he finds you the levels, and those are the levels of resistance.
140.01 was your high. I mean, someone's came in with a piece. I don't know. I mean, right now, to me, 135. I mean, look at that. That was a triple top. I had just after that 140 high, and then Dollar Tree going the other way, man. Oh, if you're a spread trader on this one, you either got it really right or really
Really
wrong.
wrong.
Yeah. Add to the standard deviations on that one. You are back here at the 123.50 area. What was this daily low here? 121.89. Yeah, I mean, you just use that as your pre-market low here for potential support here in Dollar Tree.
Let's go to Best Buy, and it's reporting on the wrong day. Don't
Wrong
report
day.
on tech day if you're a retailer.
How do they know, though? That's the question.
I know it's not the company's fault. I just like to blame them.
Best Buy reporting $1.47. Analysts were at $1.38. Sales $9.8 billion. Analysts were about $9.6 billion. They do, like the retail theme we've been seeing here today, raise their guidance. They raised their 2027 earnings guidance by about let's call it 40 cents or so. They're now in the range of 670 to 690. Analysts are under 660. So a beat. Guidance looks fine. Not the right day to report. You said it, Triple D.
No, wrong day to report here. Joel, find us a level.
Well, the level I really like is under $80. Don't know if you're going to get that low. The next 79 even was your low here. You bumped above the 50. Right now, trying to hang in here at the 50, but $80. I still like that, even though that low was 79 because there was a couple other lows just above the $80 level. So big move here for, feast or famine, your retailers, right? I mean, that's the way it goes.
Yeah, Moderna offering here. We thought that this might happen sooner. It took a while for them to materialize it, but they eventually did. Yeah, it was about a week. 2 billion. Now it's $2 billion offering of zero coupon convertible senior notes due 2032. So yeah, obviously these can be potentially dilutive. That is why Moderna is trading down here this morning here. You got to give the stock though the resilience, banner
Definitely.
here, because this stock pops 200%. Did have the ugly second day, but then it's been kind of in consolidation station here. You'd think almost consolidation go higher. We'll see what this offering does to it though. Joel, technical thoughts on mRNA?
Oh, it held up. It's calming down. It's calming down a little bit after its episodic pivot day, right? That we learned a new word with Trader Brad. But for me, longer term or long term, short term or whatever, if they really want to take this back up to 180, would have got almost to 200, right? When in the after hours on this day. It needs to stabilize in here at the 145 area. Your 2-day low 141.21. You got below that. I mean, pricing, right? I mean, not a lot you could say technically until you get the pricing on this.
Sometimes they give them to you right away on the converts, and sometimes you got to wait for it. I don't see a pricing here.
Yeah,
nothing yet. Yeah, that's what I was gonna ask too.
Usually on the converts though, they're priced above. Remember too, like because they got to be like incentive to convert it. So anticipates the cap price of the capped call transaction will initially represent a premium of at least 150% over the last reported sale price of the common stock. So it's not the same as like a regular offering where that becomes a magnet to the price, because these stocks, when they're doing converts, they put them above it. So it's not as much of a concern as just that it's flat out dilutive. Sometimes the size of it though, you can figure out, okay, we got $2 billion worth. You got to, you can go do your CFA hat. You can go do it the market cap. Just hang on with me for a second on Moderna. So if you're diluting by potentially $2 billion, market cap on this puppy's 59. So you can take 2 divided by 59. Let's just see how the algos are doing. Go to our trusty calculator because I can't do 2 divided by 59 in my head. 2 divided by 59 equals 3.38%. Moderna is trading down 4.1%. So there you go. That's how you figure out the quick math, is like take out the market cap of the potential dilution if everybody converted there, and then you can come up with a number there. So it's a little bit heavy, being sold down here if you're just doing the CFA math on it.
Did you say above 150% above.
That's what they do on you have to. So Joel, when you're doing a convertible, you have to they put them above. They don't give you like a convert down. Everybody would convert right away and make the money.
Right. No, I
These are
know.
longer term. So they're saying if the thing goes up, then you can convert it. It's like an option. So these are like a convert is a call option. So they're always priced above where the current market price is, and they're typically significantly above it. So this is not out of the ordinary at all.
I don't know. I don't know if that one comes across my inbox. I'm not sure I'd be biting on that one after that price action. But still, I mean, what you got to look at is the way it's held up, and just Merck has been holding up too, but had a bad day yesterday, giving some back down today. So
probably down a little bit with Moderna. These two are linked at the hip to a certain
Yep.
extent. Your XLV train down, rotation not helping in either. Most of your drug stocks are down because Nvidia is up simply too much. When Nvidia is up 6%, SPY's barely up. They got to sell something else off, and that's what the institutional money managers come in this morning and start doing. Build a bear. You weren't building any bears here, Brentster. You don't go in there and build your bears or build your dolphins or build your whatever stuffed animal you want. BBW, earnings were not good for once.
Here is a retailer that did not perform so well. For the quarter, they reported an inline 70 cents. Their sales missed at about 115 million. Analysts were up over 121. And like these other retailers that were raising guidance and the stock was going down, unlike Build-A-Bear here, they cut guidance. They are now looking for 2026 sales. They cut it from 530 to 550 million previously, all the way down to 500 to 525 million. That is well below the analyst consensus estimate. We have BBW shares down 14 or 15% here this morning.
The whole experience in there is pretty cool. Like, obviously, I told you the story. My kid went in there. She was this was like 3 or 4 years ago. Went in there. She's about 5 years old. And my wife took her in to build a bear, and she builds a dolphin. Didn't build a bear, but built a dolphin. And you're like, oh, add a little, bell in there, add a little scent to it, add a little thing, all these little things. Get to the end, and the dolphin's like $48. It's a stuffed animal. It looks like it's $5 at a dollar store. So I mean, the margin's got to be just absolutely incredible here, because there's no cost of the materials. Now, it's labor intensive because you got somebody walking through and holding their hand as they're building the bear. You want a little extra stuff.
Experience.
It's an experience. You're selling an experience. So that's the geniusness of this, because cost of goods sold is probably not high, but they do have the cost of running the store, and they do have the cost of labor. So that's going to be a lot more intensive than the $5 stuffy at the dollar store that looks identical. So I was in there with her about 3 months ago. I went to a Build-A-Bear again. We were in the mall in Toronto, and they have Build-A-Bear there. And I go in, and I'm like, she's looking. She's like, yeah, I want to do it. I'm like, there's a stuffed animal place across the hall. I'm like, maybe we should just go look over there. And she forgot about it. And then I bought her a $10 stuffy instead of the $50 stuffy. And she was just as happy. So, I mean, you got to try to get away from get the experience, but I mean, they make a lot of money in the margins, but still, I don't know. As a parent, the kids love it, but as a parent, I'm just scared when I go in that place. I'm like, it's not even 45. It's probably gonna be $70 because of inflation from 5 years later.
I just found the gross margin in the press release. It is 54%.
It's pretty good on a retail stuff.
Pretty darn good.
Yeah.
Yeah. Well, after what they did to Dix the other day, I'm almost hesitant to try and give support, right? Because they just annihilated it. But I do have a little bit of confluence with the pre-market low, and an area pre-market low, you stuck down to 32.22, and you had some lows just under 33 and right around 33. So you're 70 cents above it. So if you get your bids out down there and you don't get them, then you may be chasing it a little bit. But price has some memory back at the $33 area, and that's where you're kind of moving away from right now. Let's go. Let's fit in First Solar. Let's talk
rating
solar
of the day, and it's got the best title for a note. BMO Capital upgrades First Solar to outperform. Can't fight this feeling anymore is the title of the note. I love that. Analyst comments, upgrade, outperform, raise our price target to $263. We think that 16% sell-off has overshot to the downside. Tariff MIP framework should lift U.S. module ASPs towards 43 to 44 cents a watt, giving a sold-out First Solar a multi-quarter window to book 2029 volumes at better prices, even as margin headwinds persist into 2027. Our illustrative assumptions show Tesla's required ASP sits at above our conservative 38 cents assumptions through its ramp, suggesting Crystal Silent, this means, at 8.6 times EBITDA. First Solar is the least expensive solar OEM in our coverage. I have said this as well. I am long First Solar. It is an oversized position for me. Started buying at 163, bought more recently at about 220. It's 205 popping up to 213 here this morning here, but I just think in a world where we need energy here, this is one of those plays that is flying under the radar, and BMO thinks so as well.
Yeah, and someone and I mentioned this on the show, didn't we? We get was it an SEDG upgrade?
Yeah, a
Yesterday
couple
was
days
it?
ago.
And
Yeah, good call.
I said, you know what? This is one sector where the analysts like to pile on. And they get in, and then sure enough, you get back to back. So I don't mind this one. That song, Dennis, that you mentioned.
Yeah.
My first concert ever. Back
Yes.
a long time ago at the Toledo Sports Arena,
Yeah.
Nice.
which is not even around anymore. REO Speedwagon.
Awesome band.
Ooh, that's a good
Awesome
one, Joel.
band. Awesome song. I mean, very underrated. Like you think you hear Journey, hear everything. REO Speedwagon, man, they were killer, man. Their songs that they came up with. So I'm with you, Joel. And that was your first concert ever?
First concert ever.
Nice.
Yep.
Great one.
Yep. I think I was like 14 or 15 years
Nice.
old. Long time ago. But people don't want to hear about concerts. They want to hear about the markets. And
9 a.m. news dump. Anything there, Brentster? I'm looking through it
made
with you.
one sweep through on my SCN newsfeed, and I did not see anything to highlight, which is gonna happen totally at these
Yeah.
9 a.m. news dumps. We got to be standing by in case there is news. We get the 9 a.m. news dump. We're like, okay, cool. All right, we're clear. There was no news to keep us updated on.
Yeah,
Did
like
you see anything,
Ford
Triple
has
D?
an exec coming in to retire Lisa Drake. I mean, I'm just looking through. There's this Abbott Labs had a headline, Next Generation Amulet 360 device receives CE mark to treat people with atrial fibrillation. Abbott's the wrong day for, any positive drug news because this is a day that they only buying tech. Yeah, I don't know. I don't see much here today.
I think we're good. I think we are clear to move it over to the SCN think tank and get everybody ready for the open. Joel, who is our guest tomorrow on Pre-Market Prep?
Tony Paul.
Tony P.
Very nice.
Coming back. Real life trading. All right, folks, everyone, have a good day. Be safe out there.
Thanks, everyone.
Thanks for watching Pre-Market Prep. Hit like, hit subscribe. Join the SCN think tank at stocktradernetwork.com.